What is range structure all about? Just with a quick example, let's use we talk about range structure. I'm very, very audible, right?
Yeah, I can hear you.
Yeah, just a quick one. Okay. Now, we'll talk about range structure. We'll talk about what are the variants of range structure. Then we'll talk about what makes a range structure valid. We'll talk about how and where to look for trace on the range structure. So we'll talk about like 4 things now. Talk about range structure. What is really range structure? What do we mean by a range structure? And the variance, what are the characteristics? What are the components? What are inside those range structures? Then how can we engage on a trade? How can we look out for trades on those range structures? Those range structure. Now, without wasting much of our time. Now, what is a range structure? A range structure is that leg that price gave to us. No, I feel they miss the English now broken and this thing, no matter.
Sure.
A range structure is that leg that was given to us by price. Okay, let me know this one. That, when price is printing, when price is moving, bearish or bullish, price is printing ranges. Price is printing ranges. So now, what is a range structure inside this price? There are those ranges that price has not worked with. There are those virgin ranges that price has not worked with. Where are they? Look at this range now. Price has not worked with this range because price has not come back to mitigate something on this range. So now this is our range structure, workable range structure. This range has been dealt with because price has worked with this range. You see that price have come back here to mitigate this guy and broke structure to the upside, leaving for us new range, to work with our other block, pure. You see? So now a range structure is that price action that price has not worked with. Or a range structure is that price action, price behavioral pattern that price will come back in the nearest future to work with. Anyhow, below the grammar, at least you in
I
Nigeria,
understand.
you understand. So now this
Yeah.
is our virgin range. Price have not worked with this guy. Price just made a high here after taking out this high. Price made a new high. So now on our mind, based on price action, we know that when price has made a new high after taking out the old high, price will come back to mitigate that guy that caused that break, that pushed up. We know that price will come back to do what? To mitigate that guy before going up. So, but price have not done it. So now that range in which we are waiting for price to act that, to behave that normal pattern is what we call range structure. And this is the range that we are waiting to take trade. This is that range that we are waiting for price to come and behave that normal behavior before we take trade. This is just it. Now let's go to the I don't know if you understand it by this diagram.
Yeah, to an extent.
Yes, and let me use this chart, normal chart. Now look at this. Look at this now. This is a 4-hour chart. You see price broke structure to the upside and change structure and break. Look at break of structure here. After price failed to continue up. Price now, let me plug my laptop.
Okay.
price. Are you there? Are you there?
Yeah, I'm with you. Yeah,
Now,
I'm with you.
okay, now, after price broke the structure to the downside, signifying that price is now ready to come down. Price gave us this range, this long range. Let's say that price have not started going up. After price grabbed liquidity from this previous daily high, it broke structure to the downside, leaving for us this big guy. Now look at the range that we are to work with. This is our new range that we are supposed to work with. After we have identified our break of structure, the guy that sponsored the break of structure. This is the new range that we are supposed to work with. This is the new range that we are supposed to work with. So we wait for price to come back to this our guy. Inside this our range. We wait for price to come and mitigate this our guy before continuing down. Now look at this one. Price have continued down. Price have broke structure, leaving this guy as our new range for us to work with. Ideally, look at the guy that caused the break of structure. So we wait for price to do what? To come back here and continue what? Down. As simple as that. You see?
Come back to me.
Let me start afresh. Now, this is price
But
made
this is
it.
not consolidating.
No, market have closed now. We are in the midnight. But look at this is market have closed now. But now look at this move.
Yeah, I get it.
Look at this move here. You see this move? This move now broke this guy, broke this structure. See, now we have a break of structure here. And this is the guy that caused that break of structure. This is the range. This is the range, the vacuum that we are supposed to work with. This whole guy now is where we will work with. Looking for trade, we are here. Look for trade here.
Okay.
Look for trade here. To sell down, to continue down. And if you continue down, you know that if you continue down, you know that we will also break structure again. And price will also leave what? Another new range for us to work with. You see? We will also go down. Yeah. The same thing. Price leaves for us
I
ranges.
understand. That makes sense.
You see? Price leaves for us ranges.
Makes sense.
So those ranges are
So
where we work with.
if it now brings structure to the upside,
it's the same thing. While you look for your ranges based on the bullish trend. Look at your range. This is your range. You see? This is your range. So you wait for price to come here. Wait for price to come here. Before you look for your trade. Before you look for your trade, let's use a bullish example. Yes. Let's find a bullish example and use.
makes sense.
You know, let's use this guy here. Now, price were bearish. Is there any other good example? Good guy. This one will do okay. Bam, 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 bam. Yeah, this one will do okay in the essential. Now, let's use this one. Now, you see, look at this. Price made a low, made a high, made a low, made a high, made a low, made a high, made a low. Now, let's stop here. Now, you see, break of structure here. Came back for that guy. Now, when price shoots up like this, when price shoot up to this guy, we know say there is something that caused that shoot up. And before price reach that guy, you don't already break structure here. and make that high wey you make. So
Mhm.
now, ideally, as me say here, this price never come down. We already know say this is the range wey we suppose to work with. This one now na bullish price action. Price dey go up. This is the range wey we suppose to work with. And you see how price still come back inside that range, mitigate those guys then wey cause that thing, still go up, still leave another range for us to still work with. See am. After what? After e break structure. After e break structure. After e break structure. Though this price did not really come down to this level, but it still mitigated something here. One guy here. And what? Continue up. Continue up. You see? Before, let's see, we have used the downtrend, but let's still use it. After price clear this whole, you are there, right?
I'm
Just
with you.
okay. After price clear this
Yeah,
guy,
I'm with
yes.
you. I'm with you.
After price clear this guy, it broke structure to the downside. This is 4 hour. Broke structure to the downside, leaving for us this guy for us to work with. See, leaving for us this guy for us to work with. And price later still came back and did what? Mitigated it and come down. See, range structure. That price action, that behavioral pattern whereby price must have grabbed liquidity from the upside or downside, as the case may be, depending on the market trend, bullish trend or bearish trend. Price has broke structure to the downside or upside,
Yeah.
depending on the market structure, where market they go. Now market is coming down. Market has price has broke structure here. Market has broke structure here. So we are expecting price to go somewhere up to mitigate some guy that caused that break of structure inside its 50% and continue down. That is the idea. But there are some cases whereby the volume is too much. Price might not reach that extent you want price to reach. It will continue falling down. But that is the case. But the main idea, the majority of the time, price reaches to that 50% and grab internal liquidity before coming down. This is range structure. Is there anything that is hard for you to understand? Let me start
No,
from
no,
the beginning.
makes sense.
You see?
Makes sense.
Yeah, now this is just a typical example of a range structure. Now, let me go. What are the variants of a range structure? Variants, characteristics, components, features. What are those things that are inside the structure that attracts price to come back to mitigate that guy? Now, this is the range that we mark out after price did what? After price broke structure. Leave our POI. Just, just.
Alpha,
I don't know. My hotspot na off. I don't know what's off. So now, price that we
This stuff like that sometimes.
are talking about components, those variables that are inside those range structure. Now, since we have marked out this our guy, you see, if you look closely inside this guy, you see this is an internal liquidity. This guy here is a liquidity. It's a drawn liquidity. Liquidity means money. Those things that attract price. If you look inside this guy, you see fair value gap. Those are the variables, variants of a range structure, characteristics of a range structure. If you look here, you see order block. Hello?
Number
They hear me, ba?
yeah, yeah. Now network abi.
Yeah, no, network. Variables of the instruction. I'm saying now. Look at this guy here. Price left for you, liquidity. This guy here is a liquidity. Price left for you, fair value gap that you're talking about. You say you know fair value gap. This is fair value gap. See this gap between this other block and this place here. See the fair value gap?
Yeah, the middle one.
Yes, the middle one is fair value gap. Then this one is other block. Those are the variables of a range structure. Let me delete them. Do them again. Price left for us what? Fair value gap. See how price touched it. Price left for us what? Other block. Variables of a range structure. Price left for us what? This guy, this swing point. This guy is a swing point inside that range structure. All these things are what qualifies this to be what? A valid range structure. A valid range. All these things are what qualify this to be what? A valid range. A valid range. You must put all these things inside that your range that you want to work with. Inside that range you want to work with. Fair value gap, other block. You must put all these things are liquidities. I think I've told you about liquidities. All these things are liquidities inside that your
Yeah.
range that you want to work with. Inside that range you want to work with. Inside this range that you want to work with. Inside this range that you want to work with. You see fair value gap. You see other block, your POI. You will see all those small price movements on the lower time frame. You see that price will come and grab their low before touching your POI, and then give you what? A buy setup to continue what? Up. This is just it. There's no hard way to, other ways to explain it. You see? This is the range structure. This is our POI. I hope you have talked. I don't tell you about POI refinement.
Refinement.
How to
Yeah, that
refine
is going
POI.
down to the
Yes, lower time.
that
Because
is like top down analysis now.
yes, now. So if this is your POI on 4 hour, so you know, say if you go down to 1 hour, 30 minutes, 15 minutes, it will not be as big as this. I will still go down. Break of structure. Now, this is your fair value gap. This is your other block, fair value gap. Now, this is your swing point on that lower time frame. All these things are liquidities. After price have grabbed them, price will do what? Price will dump. Boom. Price will dump. Still break of structure again. See this? This is a virgin range now. This is a virgin range. This guy now is a virgin range. You understand? So if price will come here now, see this guy now is a liquidity. See this guy now is our POI. Also have fair value here. So you see, so we expect price to do what? Come back, come here, give us a what? Our sell this thing. For us to sell down. You see? Range structure. After you have identified your market trend, and market has made a high, a current high. You know, when price makes a high, it must make a low. So you wait for it to make that low. When you have already marked out your area, where that possible area price will reach when it makes low. That is your range. Price has made a high. You have marked out that possible area price will reach when it makes a low. To do what? To continue the trend. To continue the trend. The same thing happens to what? A bearish market. See, there's nothing hard about this. You understand it, right?
Yeah, it makes sense.
Now, what makes, we have talked about the variables of a range structure. And those variables that I pointed out for you are what makes a range structure valid. They are what makes a range structure what? Valid. Those liquidities, those internal liquidities. Internal means inside. Those liquidities that are inside, those fair value gap, those other blocks, they are what makes this range structure what? Valid. They are what makes this range structure what? Valid. They gives it high probability to play out. You see? Now, the last one is how and where to look for trades. You already know our POI. We look for trade inside this our POI. Now, if price approach this our POI and you know that this is 4 hour, we will not, maybe you will not like to take trade on a 4 hour, because if you take trade on a 4 hour, our stop will be much. We'll have like 40 something, 50 something pips. Now, what do? We go down to 15 minutes. 15 minutes or 1 hour. Me, I like 1 hour. You go down to 15 minutes. Now, as you go down to 15 minutes, you see how price tapped into that area. Price tapped into that area and did what? And broke this guy. Price tapped into that area. Look at it here. Price tapped into that area. Came down here. And do what? And broke this guy. There was a little break of structure here. This guy is now. Look at it. There was a break of structure here. Price broke structure here. Leaving this guy for us to work with. After price rallied down, price touched our POI. This is the case of if you want to come down to lower time frame to take your entries. As price tapped into that your POI, it's displaced. Because look at where price was making, price made a low, made a high, made a low, made a high, made a low, made a high, made a low, made a high that tapped into that area. Now came back here and do what? Break this guy. Then this is the guy that caused that break of structure. Price went there and tapped into it and do what? Continue down. See, as it's not killing, you know, this smooth, but this is just the idea. You understand?
Yeah.
This is the case of if you want to take entries from that lower time frame. You see, from that 40 pips now, we will get from that higher time frame now. It have reduced to like 20. If you here is 19 pips, but if you want to put your stop here, it will be at something pips. You see? But I like to take trade from the 1 hour. 1 hour we have on the 1 hour, I would have refined my entry. I would have refined my entry.
So 1 hour is your entry.
Yeah, 1 hour is my entry. That's my own personal entry. You can base as you progresses, you will start liking some certain things. We'll start falling
Okay.
in love with some certain things. Maybe time frame, you start falling in love with time frame. Maybe you say based on work, wow, 10 hours is my best time. Based on work, 2 hours is my best time. Based on work, 15 minutes is my best. You start liking some certain time frame based because it gives you what freedom. It doesn't disturb your other daily activities. You understand? Time frame is barely to give us what guide so that we not disturb our daily activities. So that is it. That's it. There's no much thing about time frame. It's just anyone that you like, you choose, but it's between from 1 hour down to seconds. Some people take trade on seconds. You can imagine somebody taking trade on seconds time frame. You see, because
As in,
it suits that person. Some people take trade based on 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour. Me, I take from 1 hour, mainly on 1 hour. It gives me confidence. Understand? So that is it. This is
yeah.
just everything you need to know about what range structure. Range structure. Do I need to explain more about range structure? About range structure. That range, that range that price gave you after it must have broken structure, either to the upside or to the downside. See break of structure to the downside. See where this price started. See this area that price reversed. This area that price reversed. This area that price reversed. Back to that guy. Back to this guy. So we see our range. All this whole area is our range. Our range. Our range. Our range. For us to look for what? Trade to this guy. You know, see? Ask me a question about this. Ask me a question.
Now,
Mhm. Just take your
what
time.
I want,
Digest them.
what I want to really understand. So the range is from the POI to the break of structure.
Yes, from the POI to the break of structure is the range. You know that after break of structure, price will likely go back to your POI, but price never reach there. But price will likely go there. So from that your POI to that break of structure is your range. Just yeah.
So every new POI and every new break of structure is a new range.
A new range, a virgin range that price have not worked. So price, there are higher chances that price will come back and mitigate that your POI as you draw, and then continue down or continue up. So that is it.
This place now, no, this place now,
Hmm? I think
the
it.
break of POI here now. The POI starts from above
Yeah,
here. Up here.
yeah.
That's how the POI starts from.
Let me share my listing. I don't
Okay.
share them. Yeah.
So also the POI starts from here.
They
Hold on.
control them now, ba?
Yeah.
Yes.
So this is the POI here.
Yes.
Then this is the break of structure. This is
Yes.
the break of structure here.
Yes. 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 Confirm.
So now from here now to here is a range.
Yes. We know that price came down. Price came down all the way. Yes, that's the range. But bring it down based on price came down. All this this is our main range that we need to work with now. So wherever price reaches, and price will come down to that your guy.
So this is the range now.
Yes, this is the range.
Okay.
Yeah.
So now what you're saying is, since price came down here, you
Mhm.
have to wait for price to come back up here.
Yes. It's not that based on experience, if you can trade it, you can buy it from here to up.
Oh,
It's
okay,
selling down.
yes,
Yeah.
yes.
That one is based
That
on
is
experience.
that is only when you have seen the reversal
Yeah,
patterns.
yes. But now this is your range, and that's where price came. That's
Okay.
what work it. And add it with all this green there. Now this is an internal liquidity. This is a previous daily high. Serves an internal liquidity. You see. So I'm doing another thing.
Okay. But can can this also be a POI?
Yeah. That's an internal liquidity. In most cases, there are in some cases that price can also come here and react. But that's few cases. But that's this place now is an internal liquidity because look at what price does. Leave your mouse. Leave your mouse. See how price do move in most cases. You see? So now
Mm.
you see that you might want to take this guy as your POI now. See, this is the last guy that caused the break of this structure. But now price might come now and take this guy out. Price might come now and do what? And take this guy out, mitigating this one. You see, before going up. You see, mitigating this guy now. Leaving this guy, taking you out at stop loss now, mitigating this guy. You see. So this is what price loves to do. Price loves to generate liquidity. So that's what price did here. That's what price did here. Price like to do this kind of thing. Come up before coming down. Then come do what? Take out that guy, mitigate this guy, and fall down. I just press
Okay.
play.
Makes sense.
Any other thing? It's already
Not really.
45 minutes don't reach now. In a 30
Time
minutes.
the flyer. How many minutes later?
This either 45 minutes or 30 minutes. It's 45
Wow.
minutes because now it's almost 12 o'clock.
Yeah.
Oh, wow. So another after the new link I will this thing I will send now is we will start from beginning. So it's after this one it will be 9 minutes. After 9 minutes now I'll send a new link. You start from beginning. Before that 9 minutes, just refresh your memories. You start from beginning. Just take
Okay.
your time and teach me. Try to mentor me the best way that you can. I know you will not be that perfect or 100%. Try to mentor me. You start from beginning from market structure and liquidity. From market structure, then liquidity, the way price moves in pattern, structural high, structural low. You try to teach me till
Orange.
this range. Understand? So that's what you do now.
Yeah.
Teach me. You mentor me everything you know. You draw it goes on the whiteboard. You draw the whiteboard on. You go to the charts. You still draw them. You anyone way they do it, they teach me, they tell me. They tell me.
Makes sense.
That's the
Makes
way
sense.
from that one you go the master in case from there where you can still put other people across you, you can still put them through. Understand? That's the way.
Yeah.
All right, let me of this.
Makes sense.
I will share link.
I don't know.
Just take your time and I will send you link.